If you want to retire in the next year or two, now is the time to rid yourself of debt. I'm Beverly, and I'm going to be talking about 3 different types of debt and what to do about each one. By the end of this video, you'll have a plan to be debt-free so you can actually enjoy peace of mind in retirement. Wouldn't that be nice? Let's dive right in and look at the first money move to make. And it's actually the most toxic of the 3 I'm going to talk about. The first type of debt is credit card debt. And if you've got that, that is high interest debt. And that's why it is so toxic. The average rate as of November 25th is over 25%. Quick story. I've had credit card debt, so I do know how that feels. You pay compound interest, and then that increases your balance. Then the next month, you pay interest on the balance, which includes interest from the previous month. It's a depressing cycle. Your small balance can balloon into a giant balance if you don't take care of it quickly. As an example, let's say you've got $8,000 in credit card debt at 25% interest, and you pay $250 a month. It will take you 4.5 years to pay it off, and you pay a whopping $5,435 in interest. And that's not all it costs you. Have you heard of opportunity cost? That's the cost of what you give up when your money is used elsewhere. The opportunity cost here is how much that money would have earned if it had been invested all this time. You want to pay this off while you're still getting a paycheck. In my best-selling and award-winning book, The Debt Escape Plan, I show you how to pay off credit card debt fast. And it also depends on your credit score. If you have a good credit score, the best way and fastest way is to use a balance transfer credit card with a 0% intro rate. You can transfer your debt from a high-interest credit card to a 0% interest credit card for a period of time. Hop on a website like LendingTree or NerdWallet, and you can compare credit cards in that category. I've seen 0% intro rates as long as 21 months. That means you can make monthly payments for a total of 21 months while paying 0 interest. Most cards do have a transaction fee, and it's anywhere from 3 to 5%. So make sure that you know what that is. The next type of debt is sometimes controversial, and I'll explain that next. The next type of debt we're going to talk about is your mortgage payment. Some say pay it off completely. Others say it depends on the interest rate. Okay, if you have a mortgage at a high interest rate and it keeps you up at night, then work on paying that off or at least paying it down. If that isn't possible, look at rates for refinancing, and you might be able to lower your monthly payment. If you're an empty nester in a big house, consider downsizing. And when you sell, of course, depends on the market in your area. Like you, before I retired, I had to make a decision about my house and my mortgage. I lived in a big house. My property taxes were so high, and my kids were now adults. I was lucky because housing prices were so high in my area at that time. And so we made a bundle by selling at the right time. Our rate for our new slightly smaller home was around 4.5% for a 15-year mortgage. And we refinanced that 6 months later with 2%. I know, that's a dream, isn't it? All this time we were doing this, I was still working full-time at U.S. News and World Report. So we could pay off our mortgage, but the money we'd use is getting about 7 to 8% interest, and our mortgage is only 2%. It just doesn't make sense. This is called interest rate arbitrage. Do you agree with that approach? Let me know in the comments. Some people think that this take is controversial, but it makes sense to me. If you're considering downsizing or refinancing, do it while you still have a paycheck, okay? That really makes it a lot less stressful. It's easier to get approved for a loan, and you'll get a better rate. The third type of debt is tricky because sometimes you need more than one. The third type of debt to talk about is a car loan. Now, I still consider that toxic debt because you're paid interest on an asset that is depreciating all the time. If you've got a high car payment, this is really an unwelcome expense in retirement. Pay it off if you can, or at least check into refinancing your loan to see if you can reduce your payments. If you've got a high credit score, the easier it will be to get a car loan at a lower rate. Also, think about whether or not you need 2 cars if you're a couple. My husband and I both still work on the side. We have different activities we do, so we do need 2 cars. Do you have debt that you need to get rid of? Paying off debt is one of my specialties, so ask any question at all about the debt we covered or a different type of debt that you're worried about. Once you get rid of debt, it feels amazing. It really does. And as you see the balance go down, you will start feeling a rush of adrenaline. I promise you will. Thank you for watching, and I will see you in the next video.